Hello, hello, and welcome. This is the Financial Turtle, the podcast for people who are done chasing shortcuts and ready to build real financial foundations. I'm here with Eric Anderson, and for over a decade, he's helped business owners, nonprofit leaders, and everyday families make sense of money, taxes, and strategy. Welcome to another episode of the Financial Turtle with Eric Anderson. We're having another episode today, and today's topic is making it official, when to form an LLC, S-Corp, or C-Corp. Eric, how's it going?
Great, sir. And yourself?
Doing good, doing good. Another great week, another great opportunity. So I'm really excited about today's topic today because sometimes people get confused about the business structure they should have and whether or not they should have an S-Corp or LLC or a DBA and what's the best thing. And so we would like for you to just kind of break down some different things of like that first question is, when should someone move from a sole proprietor to an LLC or corporation, or if they should have a DBA first, and how that process works? If you could break that down for us.
Yeah, great question. And it's mainly a great question because a lot of times, especially when I run into clients, my first time meeting them who are LLCs, I always get the line, I'm an LLC, but I have not been using it for years. And it's like, why would you become an LLC if you do not have a business that's making money, if you don't have something that you're going to use? Because a lot of times people become an LLC because either they want to be official, so everybody tells you you need to be an LLC. And in today's climate, we know a lot of people become LLCs just from believing and getting your LLC and your EIN number to do all these. Again, I don't want to use the word scam, but have these people help you get business loans for businesses. Again, you're saying to me that you have a business that you're not using that business, but you go out and try to get business loans for that business, even though it's not a business that's even making money or a business that you're even doing anything in it, which really makes no sense. But that's why a lot of people come in and they have a bunch of LLCs because they watch these videos and stuff like that tell them, even though you're not ready to be an LLC, as far as having your business, a business that's making revenue or doing anything like that, you still mainly become an LLC from the trying to get credit for your business standpoint, not so much from a tax standpoint, because anybody who does taxes tells you for the most part, an LLC and a DBA pretty much both work under a Schedule C. So it's pretty much the same taxes on both returns. Most people become an LLC is to kind of protect you personally from your business, but you really do not get any tax advantages until you become an S-Corp. So in Texas, I'm going to talk mainly about Texas from the state of the Secretary of State and the Comptroller and stuff like that. When you become a DBA, it's around $20, $25 to basically save your name. So a lot of times I tell people if they want to start a business, if I want to have a name, like if I'm making plates or I'm doing something, I just want to start the business out. A lot of people do that. I'm selling crafts, I'm making plates, I'm doing stuff but I want to have my own name to be separate. So, hey, just go down and do the DBA, pay the $20, $25 for that. You don't have to worry about the comptroller part of having to file a franchise tax every year. Things like that. You just have a name. You're just basically saving your name. When you become an LLC, again, I'm just going to talk about Texas. And when you have to become an LLC, you have to go to the Secretary of State, you have to file a certificate of formation, and then you're registered at the comptroller, which means you have to fill out a franchise tax every year. And again, depending on what state it is, how much you got to pay every year to file your franchise taxes and stuff like that. But here in Texas, if your business makes less than 2.6 million, all you got to do is just file the return on time. And again, that's very important because for some reason, a lot of people who have LLCs, they don't understand that even if you say to me, I haven't used the LLC for years, I'm not running anything through that LLC, you still have to file the franchise tax report. And that's where a lot of people fail because they don't know that. And a lot of times, if you have a registered agent like LegalZoom, an attorney or whoever, if they're the registered agent on your LLC, they get the letter. You don't get the letter. So you don't even know that you have to file a franchise tax report every year. And like I said, a lot of times when people come in here, they'll say, hey, I got a letter saying that I'm behind on my franchise tax report. And they'll say, I thought you did my taxes. And it's like, that's not the same thing. Your personal taxes and business taxes are not the same as the franchise tax report that you have to file at the comptroller here in Texas. And if you do not file it for 2 years, your business becomes inactive. And a lot of people don't find that out until they try to go buy a home. Or let's say I'm a business and I get a contract through the state, or I get a contract through somebody, and then they look my business up to write my business a check, and they say your business isn't valid. So then you have to go through the process of having to file the franchise tax report for all the years that you did not file it, and then have to file a real estate reinstatement form, have to go back to the Secretary of State and all that, just to say you're an LLC. Again, in many cases, a lot of people are just LLCs, especially during COVID. We won't even talk about that, about the PPP loans, the EIDL loans, the ERC loans, and stuff like that. A lot of people became LLCs just to try to get this money, even though they, again, did not have an official business and like that. They're getting picked up right now. So it is what it is. And what I mean by getting picked up, they're getting arrested because they were turning in false returns, false applications and stuff like that, where somebody told them just become an LLC so you can try to get this money. Same thing as you see the videos of just become an LLC just so you can try to get these business grants and business loans and stuff like that for businesses that aren't even making any money. Again, we've already covered about how that makes absolutely no sense to get a business loan for a business that isn't making any money or that is failing, because at the end of the day, you're just going to make it worse for yourself because now you got to pay that loan back. But I usually tell people, if I'm going to start a business and I'm not really sure if how this business is going to work out, if I'm not really worried about being sued and stuff like that, I tell them just to be a DBA, to save their name. Just pay the $25, go ahead and work through that. And once you believe, it's going to start making money, it's going to start doing what it needs to do, then become an LLC. If someone wants to be an S-Corp, which is the next step, people, again, don't understand that part. When people say, I want to be an S-Corp, but not an LLC, you have to be an LLC first. So you have to file the LLC paperwork, become an LLC. Then once you become an LLC, when you've grown the business to the point of where you're showing, I usually tell people, if you're showing somewhere between $40,000 to $50,000 in profit, then you need to look at maybe turning your business into an S-Corp because of the tax savings of making yourself an employee of the business, and the K-1 part of the profit that comes over, you don't pay self-employment tax on that. But the flaw that people find when they're turning their business from an LLC to an S-Corp is, number one, you have to file what's called an 1120S form, which is due in March, as opposed to your personal return, which is due in April. So a lot of times, again, somebody will come up and say, my attorney or LegalZoom or whoever I saw on TikTok or whatever told me I need to turn my business into an S-Corp. And they're sitting in front of me after March 15th. And it's like, oh, okay, did you file an extension for the S-Corp? And like, I had what are you talking about? It's like, you have to actually file an 1120S form for your S-Corp. Even if, unlike when people have LLCs, there's really no purpose in doing a Schedule C for your LLC if no information is running through it. But if I turn my business into an S-Corp, even if it's showing a loss, even if it's really not doing anything, you should really still file the 1120S, even if it doesn't have any information on it. So a lot of people become S-Corps and they have no idea that they need to file an 1120S form, which is due in March. Again, you can do an extension on that, just like with your personal. A lot of people will file an extension for their 1120S, and they also file an extension for their personal to give them the 6-month leeway to get all their stuff together, especially depending on how big your S-Corp is and stuff like that. Everything you need to go through it with your accountant, whoever's doing your bookkeeping and stuff. Usually, most of the time, a lot of times, most of the 1120Ss that I work with, they do extensions. So that's why it's going to get pretty busy here in a second, because those are due by September 15th. The biggest flaw that people don't understand when they become an S-Corp is you have to pay yourself what's called a reasonable salary. So if I have a business that say profits $100,000, I can't do a K-1 that shows the profit of the $100,000 and have that K-1 come over to my return, my personal return, and only pay the federal on the $100,000 and then pay no self-employment tax on the $100,000. No, you have to pay yourself a reasonable salary, and you have to do that out of payroll. So you have to put yourself on payroll and then have taxes taken out, federal self-employment and all that stuff. And then you get a W-2 on your business, from your business to your personal, and then you get the K-1 from the LS to your personal. Again, the LS does not pay taxes. Everything rolls to your personal return. But again, you have to pay yourself a salary. Again, a lot of times when people come in and they say, oh, I'm an S-Corp, and I say, great, can you hand me your W-2? And they say, what are you talking about? I'm like, you're supposed to pay yourself a salary. So a lot of times people try to do a Schedule C or whatever to basically show that they paid themselves, like did a distribution, whatever, and then pay the self-employment tax and everything on the profit from the Schedule C. That's people do it, but that's not really the legitimate way you're supposed to do it. You're supposed to actually pay yourself a salary. So a lot of times I tell people, if you don't make enough profit to pay yourself a salary, there's really no purpose of being an 1120S or being an S-Corp. So again, a lot of people come in and they say, oh, I want to be an S-Corp or I am an S-Corp. And then again, you have all these people telling you to write everything off, buy that Tesla, go buy that equipment, go do all that stuff. So you basically pay no taxes. So if you're going to do a tax return where you show the business at a loss or pay no taxes, you're basically paying somebody to do a return that does not help you tax-wise. The taxes are the same because who would pay taxes on, who would pay self-employment taxes on a business that's not profitable? You don't pay taxes on that. So what's the purpose of being an 1120S if you are not showing a business that's profitable? So again, a lot of people get caught up or they really don't understand. So they'll let an attorney, they'll go on LegalZoom and they will do the part about being an S-Corp because again, you think that's the next step, but you might possibly not be ready to be that next step. And sadly, a lot of times it's businesses that aren't profitable. Same thing with the LLC. Understand that when you first open the business, if it's not showing a profit and stuff like that. But again, I digress in saying your goal is not to keep showing your business negative. I know it's what to tell you, but you definitely do not want to have a business that is negative every year. What's the purpose in being a business? And the IRS is eventually going to say it's a hobby anyway.
Yeah, yeah. That brings me to a point because I hear a lot of that on social media. Like you can write this off, and this vacation or things probably not shouldn't be writing off.
It's really not right.
However, and some people think that it's dollar for dollar, right? Like when you write everything off.
Correct.
So
what really gets me more than anything else is a person who says we're helping you grow generational wealth and do all this stuff by paying less taxes. But if the expenses that you are writing off are legitimate expenses, meaning I really went and bought that car or I really went on that vacation. So basically I'm spending money to save money on taxes when I could be an LLC and open up a SEP IRA, or I can be an LLC and I can pay myself a salary and open up a solo 401k. That's building retirement. That's building wealth. But again, that's not flashy. It's more flashy to go buy the car. It's more flashy to go to Dubai. It's more flashy to go to Hawaii. It's more flashy to go to Disneyland, to have a birthday party and all kinds of stuff like that. We think that is generational wealth. And if you don't believe me, again, watch the videos of the people who are telling you they're helping you grow generational wealth by getting off of private jets or showing themselves on vacation or showing them driving cars. That's not generational wealth. That's not growing wealth. That's spending money. A person who's
that is spending money. It's like, no, I'm spending money.
But then if I said to you, how much money do you have in reserves? Let's say you have payroll. How much money do you have in reserves to make payroll if you have a bad month? Or how much money are you spending in retirement? So put it into some type of retirement vehicle so you can walk away from your business. I can retire. Just like if I was working at a regular job, I could retire. And people say, well, my business is my retirement. Okay, great. So you're going to be able to leave it to somebody, or you're just going to do this until you die. Because again, you're not taking the steps to be able to retire. You're not doing the things like if I worked at a job where I had a 401k and had an employer match and all that stuff. If you're an S-Corp, you're an employee of your business. So you're able to do the same exact thing as someone who's working at a regular job. But again, we don't see those videos. We don't see those conversations because again, the whole conversation is you walking around a warehouse full of cars, making it look like that's what being a business owner is, or getting off of jets and stuff like that and saying that's what being a business owner is. That's building wealth because I make you believe I can buy all these things and you can write all this stuff off on your business. But again, you're having to keep getting all these loans. That's the conversation, is you getting all these loans for your business because you've built up no reserves. You built up nothing as far as being able to say, I don't need to keep getting loans because I have all this money in reserves. I have all this money sitting in, savings accounts and stuff like that for my business. I'm basically doing the very thing that people say they don't want to, is why they quit their job, become a business, because they don't want to live check to check. You're worse than living check to check because you don't even have a guaranteed check, but you think it's different because you have all these loans and you believe you have all this stuff. But again, if you have a bad month, you can't make payroll, you can't make overhead. So that's even worse than somebody working at a job. If I'm working at a job, I'm only responsible for myself. I'm not responsible for the business. So I just need to take care of my bills at home. If I own a business, I can't walk around and just spend all the money like I'm crazy and expect to be able to pay all the bills for the business. So that's something that you really need to think about when you're moving from a DBA to an LLC to an S-Corp. A lot of people, when we have these conversations, it's like, you should have just remained being a DBA, because especially if you become an LLC and you don't do something as simple as your franchise tax every year, which is free if you go online and file it yourself. But a lot of times we don't even do that. And then I've actually seen people who were buying a home. It's happened time and time again. Someone's getting ready to go buy a home and you crossed all your T's. You think you've crossed all your T's. You think you've dotted all your I's. And then all of a sudden the lender calls and says, hey, we're looking up your business because your business is part of your return to get the home. You're showing a business that makes enough money to be able to buy the home. And then the lender calls you up and says, hey, we just looked you up and your business isn't registered. So now we're hustling to have to file all the back franchise tax reports for your business and then having to file the reinstatement form, take it to the Secretary of State, and then they reinstate you back at the comptroller. And this is all for a business that, again, in many cases, even though I just said you're using the business to say the business is making money, in some cases, it is, you're using that for that. But in other cases, you don't even have a business. Your business isn't even making any money, but it still is stopping you from getting your home. And again, like I say all the time, because I have a legitimate business and do this legitimately with clients, you can't tell me that's not true. Because I spend all types of time with clients having to come in here. And when it's revoked like that, because you can go online and file your franchise tax. It's that simple. You can go online and actually file it. But once it's revoked, you got to come here to my office and we got to fill out all the forms by hand. And then you got to walk it down there and get it all done and everything. Again, just because you became an LLC because somebody told you to. Again, in many cases, to get business loans, to get lines of credit and stuff like that, for again, a business that you're not even using. And makes absolutely no sense.
Eric, that's good. He said for a business not. So you must be making some money, but we all have dreams to be able to have a business, and we're working, for those who are working on there, it's like, hey, I got my DBA. I maybe got about $10,000 now of revenue now, my first year. Most people are like, well, go ahead and protect your business,
Correct.
all that. I know I had to like get insurances and stuff like that, but I then also got that LLC to have that type of protection. And so you were saying that in order to get to the S-Corp, you would need at least, you will recommend $50,000 or more in revenue, correct?
Profit.
Or profit.
Yeah. Again, that's the problem, is a lot of people, like you said, they confuse revenue with profit. Because again, I can have $50,000 revenue, but have $60,000 in expenses. So it really doesn't matter what my revenue is. If my expenses are more than my revenue, my profit's going to be negative no matter how much money I make. So the most important part is your profit. So if you're $30,000, $40,000, $50,000 in profit, so let's say I'm $40,000 in profit and I'm a Schedule C, I'm having to pay federal and self-employment tax on that $40,000. If I'm an S-Corp, and let's say I pay myself a $25,000 salary. So let's say I pay myself a salary of around $2,000 a month, and then I have a K-1 at $15,000. I'm paying taxes on the $25,000 throughout the year. I'm W-2ing myself. So I'm taking out federal, I'm taking out self-employment tax, and the company that I work for, because I'm an employee of the company, just like if I work at a regular company, half of the self-employment tax and Medicaid comes off out of my check, and then the other half, the business pays for. And then the business is able to write that other half off. And then the $15,000 that comes over on the K-1, I only pay federal on that. So a lot of people do that, but what do you think the flaw is on that? If I'm paying myself a salary, and this is where, especially some of the big name places that you guys see, this is how restaurants definitely fall apart. I'm not going to name some very, very famous known restaurants. We try to say it's racist. We're trying to say this and that, but this is actual things your business is supposed to be doing. So if I have 20, 25 employees and I'm W-2ing them and taking their taxes out and everything like that, I have to file a 941 every quarter. And for those of you who do not know what a 941 is, which is interesting, again, for all the people I had to go on down to the IRS with, because they were having people file ERC credits for businesses that don't do 941s, who don't have employees. But again, that's a whole nother conversation. If I have 25 employees who I'm W-2ing and taking taxes out of, I have to file a 941 for those people every quarter. And in most cases, you have to file deposits every month. If you don't do deposits every month, you get penalized. It's like if you have taxes over $2,500 every quarter, they require you to actually do deposits every month and then turn in the 941 and the 940 every quarter. A lot of times what happens is I'm a business, I'm collecting all your federal, your half of the Social Security and Medicare, and I'm supposed to send that in with the 941. And a lot of times these businesses, as you see, again, you can look it up. A lot of these businesses fall apart because they're not putting that money away. They don't have like a separate account or whatever to make sure, because again, at the end of the day, it's like when I tell people it's sales tax, when people act crazy about having to pay, if you're my business and I have to pay sales tax, that's not your money. I'm collecting sales tax, right? That's not my money. If I charge $100 and I get the 108.25 here in Texas, the 825 is not my money. So why would I be freaking out about having to pay the 825 to the comptroller? That's not my money. The same thing with the 941. Why would I be upset about having to file 941s and pay the taxes? The federal part is not my money. That's when I'm taking out of their taxes, out of their check. And then, yeah, I'm responsible for half of their Social Security and their Medicaid. But again, that's a write-off. That's payroll taxes that I'm able to write off. If I'm an 1120S, that's a write-off that the business can write off. But the problem where they make, again, if you're got a business that I hate to use the word paycheck to paycheck because you're a business. But if I'm a business that does not have those systems in place and making sure that I'm doing what I'm supposed to do as far as collecting taxes and filing the 941s and doing all that, your business can end up being shut down. Something simple as that. You can make all the money in the world, but if you are not doing those type of things, your business can get shut down. Again, I'll say it, one of the biggest places, it's like we laugh all the time. Not laugh, but we talk about how on earth can Turkey Hut, a place like Turkey Leg Hut, is that what it's called, Turkey Hut?
Yeah, Turkey Leg Hut.
How can they be shut down? And that was one of the reasons. They weren't doing their 941s. They weren't turning them in. And you were like, well, why would you not turn that money in? That, for the most part, the federal part, that's not your money. And then half of the self-employment tax, that's not your money. You're taking that out of people's checks. So why would you not turn that in? Because you're balling. You're going to buy, you're doing all this stuff in your business, but you're not doing the essential part of that. So a lot of times it's something that you really shouldn't mess with if you're not going to do all the steps. It's something as simple as, especially if I have a business that's not making a bunch of money, I wouldn't become an LLC if you can't even do the simple part of filing your franchise tax every year. And that's free. Somebody might charge you to do it, but the actual form, if you do it yourself, it's free, but we don't do it. But again, a lot of times people don't even remember that they're an LLC because, again, I'm going to say it one more time as we wrap up. A lot of people become LLCs because they watch these videos of people telling you, become an LLC, get an EIN number, and I can help you get $150,000 or $250,000 for a business. And again, how am I a business if I'm becoming an LLC and an EIN number from this conversation? So don't tell me you're a business that's making money and you're using that money to take the next step. You're getting that money because they're basically telling you you're under the impression it's free money. So you believe your business is going to grow from this 250 or this 500,000 that they're getting you. And I'm sure we'll do a video later about how that's not legit because, again, in many cases, they're lying on the application to get you this money. Again, another video. But you're doing that just to get this money, even though it's not going to be used for a business. You don't even have a business. So if you start a business or you have a business that isn't making money, a lot of times you're going to be running back and forth, or you're just going to be in this never-ending cycle of, I'm getting these loans to basically keep the doors open, but I'm not profitable. But you don't see that because you have money to keep the doors open. So you think you must be profitable. But if you look at the fact, no, I'm basically living off of these loans, we don't see that. And again, that's That's another video. That's another topic. Because today you just asked me the difference between the LLC and the S-Corp. But again, a lot of times people don't think about that. People just get the loan. They say I'm a business and they're able to just do all these things and write them off to not pay taxes on on a business that isn't making any money. But we think that's generational wealth. We think that's growth. But if someone really sat down with you and showed you your profit and loss statement and showed you your balance sheet, you're like, you're not making any money. You took a loan out that you're paying just like if I went and got a personal loan. I'm balling a little bit and I'm able to tell everybody I have a business and all this and that. But at the end of the day, I don't have a profitable business.
So what about a C Corp, right? Because you talk about the LLC, S Corp, and then the C Corp. What is the
Very,
difference between the
very
S Corp
few
and C Corp?
people are C Corps. I don't even want to confuse that today, but very, very few people are C Corps. Mainly you become a C Corp if you have investors. That's the main reason. The double taxation of having to pay taxes on your C Corp and stuff like that, a lot of people don't even need to mess with that. I have less than 10 clients who are C Corps. Hardly anybody is C Corps. And a lot of them, like you said, they're C Corps because they have investors or whatever into the business and stuff like that. Most people, you are basically LLC, a S Corp, or a partnership. And a partnership in its simplest terms is basically an LLC with more than one member. So basically, instead of you filling out a Schedule C, you fill out a 1065, and the 1065 has everything with the business. And then each partner gets a K1 from the profit or the loss on their split from the 1065. And again, the 1065 is due in March. And then if you do the extension again, that one's due in September as well. And again, same thing. If you don't understand that you have to file a whole different return as opposed to just your personal Schedule C, if you are actually registered at the IRS as a 1065. And a lot of people don't know that till we have the conversation. And I say, are you a partnership? And they say, I have no idea. And I say, do you have your paperwork from you filing the EIN? And when they pull the paperwork out, again, right in the middle, it says the IRS is expecting you to file a 1065 form every year by March 15th. And
Thank you,
again,
Eric. I
a
really
lot of people
appreciate
don't know.
that, man. That's really good information because I think that a lot of people just don't know the difference between the different forms of businesses that we can kind of take on and when we should do it at a certain point where it's not revenue, it's profit, right? So I think that sometimes you think, oh, I made all this money, but then it's like I made all this money, but then I had this much in expenses. And so then, and all these different types of factors that play into that. So Eric, one last question as we wrap up for this episode. Any final thoughts when establishing a DBA, LLC, S Corp, C Corp? Can you just break that down and give like a little bit for those who just really need to know right now? What quick?
So the best advice I would use, and again, I'm not trying to be out here arguing and doing all this with people. I would definitely, the best saying we always say, a person like myself, would you rather pay someone like me the $250 or whatever an hour for the consultation, or would you rather lose $50,000 to $75,000 for somebody who's only trying to sell you a product? Because you can save yourself a whole lot of money. Again, we've had conversations offline about that very thing, where people have come in and they said, hey, they want me to get this loan. They want me to do this. They want me to take this course or whatever. And when we sit down and have a conversation about it, a lot of times I say to people, that's money you're not going to get back. And when you sit down and really think about it, when you sit back and take a breath and do things like that, to think about it before you actually impulsively buy that course or let them get you this loan and fix your credit and all this and stuff, and they charge you these outrageous amounts to do it. And then, like I said, at the end of the day, you have this expense of having to pay them to do that. It's better off to sit down and talk to somebody and have a legitimate conversation about what is best for your business. Don't let it be all cookie cutter like you see in all these videos and stuff like that. It amazes me when I see people say, I can get you $150,000 from this loan and everybody is signing up for your course. And a lot of times that's not your lane. That person can't help you. They can't. But because they're telling you you can, and it's because something that you really and truly believe that is going to somehow upgrade you, you're willing to pay for that as opposed to sitting down with somebody who really and truly knows what they're doing, who really has conversation. Again, like I said, you wouldn't believe how many people, the very conversation of, you're supposed to file a franchise tax report every year. They don't even know that. So, and again, that can end up costing you money. Like I said, it's $50 if you file it after May 15th. here in Texas. I know I have clients in California who it's almost $1,000 to be an LLC, just to be an LLC. And so that's become a lot of people in California say, I'm not going to be an LLC. And so when you think about the cost of becoming an LLC, the application and the annual fees and all the paperwork and all that stuff, is it worth it to become an LLC just to try to scam and get a loan that you couldn't get on your own? And then if it doesn't work out, you don't fill the franchise tax out. Even if it does work out, you still don't have the wherewithal and knowledge to know that you need to file it every year. So then it can come and bite you in the end anyway. So you really need to think about what are the procedures and what are the steps I need to take on an annual basis to keep this valid, to make sure that my LLC is not revoked and stuff like that. You shouldn't just become an LLC again because someone says they can help you get money, but not have the knowledge of knowing everything that you need to do on an annual basis to maintain that LLC. And the next steps of being an S-Corp or a C-Corp. Again, like I said, I really was going to talk about a C-Corp, but again, a C-Corp as well is due on a different date than your personal. So that's it. So just make sure that you sit down and have a conversation with somebody who actually does taxes, someone who actually knows all these dates. Because trust me, most of the people who are telling you to become an LLC, they have no clue on the franchise tax part and the requirements of what it takes to not just get the LLC and the EIN number, but to maintain it. And in many cases, that's not worth it.
Awesome. Thank you, Eric. I really appreciate you sharing that words of wisdom. Y'all, thanks for tuning in to The Financial Turtle with Eric Anderson. This has been phenomenal, just learning about LLCs, S-Corps. And so we appreciate you. Please go to all of our channels, like, subscribe, comment. Please send in if you have any questions or any comments or anything at all, please send it in to us. We would love to have your feedback. And we will see you on another episode of The Financial Turtle. See you soon.
See you soon.
Thanks for tuning in to The Financial Turtle. If you're ready to take that next step towards financial clarity, visit andersontaxes.com. Learn more about our team and connect with us. Make sure you subscribe and share this episode to someone who may need some guidance, some real guidance, not just good sounding advice, you guys. Remember, the goal isn't to just move fast, it's to move smart. Let's be the tortoise, not the hare, like Eric said. And we'll see you next time. Thank you for joining us.